Okay, so let's begin. Good morning, good afternoon, everybody, depending on which area of the globe that you're dialing in from today, and welcome to today's webinar. Thank you to FX Street for hosting the webinar, as always. I hope you've all had a great week in the markets, and you're looking forward to, obviously, more fantastic weeks in the run-up to Christmas. What we're going to do in this webinar is go through the various different currency pairs and look for some short to kind of medium-term setups. That means setups are going to set up either today or potentially tomorrow or going into next week. At the same time, I'm going to teach you the strategy that I'm using for analyzing the markets. And this is a very, very simple price action based strategy. So it doesn't require any sort of wonderful proprietary indicators or anything like that. You'll see that I have moving averages on my charts, but you don't even have to use those. I just like to have them on there for a little bit of context. So hopefully we're going to make this session sort of like a session where obviously we identify setups, but also you learn fantastic and very, very effective strategy actually for being able to trade the markets. Now, the thing with trading the currency markets, or indeed any kind of financial market, is that things don't need to be complicated. A lot of the time we find that new traders particularly, they feel like they need to overcomplicate the issue. They're trying to solve the problem of losses, if that makes any sense. So every time they get a loss, they want to figure out a way that they can avoid that loss, rather than accepting that actually we're all going to have losses. No one's perfect, all right? And even if you were the best trader on the planet, it's very, very unlikely you're going to go through your life without having losses. And what people tend to do when they try to sort of over-engineer a system is they throw loads of indicators on there, and they'll say like, oh, this MACD would have kept me out of this particular trade, which was a loss, and this moving average would have kept me out of this trade, which was a loss. And they throw 100 different indicators on there, all in this bid to find a system that keeps them out of all losing trades, rather than just finding a system that works, is effective, that says, yes, I'm going to have losses. That's absolutely fine. But you know what? I have an edge. My strategy has an edge. And therefore, if I keep trading it and, I take enough of a sample size full of trades, I'm going to come out ahead of the game. We all have to accept that we hit drawdowns as traders. At the moment, I've been holding a trade. It's a longer term trade, but a trade that's going against me and costing me money. It doesn't mean that my account is down overall on the year. It just means that this particular trade is a bit of a headache. But it also doesn't mean that I go and change my strategy. Okay. I know that the strategy works, so I'll just continue to keep trading it. It's made me money over the years, and it will continue to make me money. So what is the strategy? First of all, you can see that I have moving averages on my charts. You don't have to have these moving averages, but if you would like them, I use them for context. It's the 25, the 55, and the 100 exponential moving average. Okay, that's a 25, 55, and 100 exponential moving average. And when I say I'm using it for context, I'm using it so that I can literally just look at a chart, glance at a chart, and I can kind of figure out what state the market is in. Is it trending? Is it reversing? Is it going sideways? So this is what I use the moving averages for. You'll also notice that I have three charts here. I've got the daily, I've got the 4-hour, and I've got the 60-minute charts. And I use this for context. So I'll start by looking at the daily, trying to get an idea as to where the markets are overall. Then I'll drop down to maybe the 4-hour chart or the 60-minute charts. And that's where typically I will take my entries off of. It's a price action system, which means we're looking for price action to occur. So we're looking for things like candlestick reversal patterns. Or we'll be looking for certain patterns on the chart, not necessarily sort of like a doji or a shooting star or anything like that, but maybe sort of like a 1, 2, 3 reversal. Ultimately, we're waiting for the price to do something at a predefined level. And this is where a lot of people go wrong. So they'll just take trades and they'll take candlestick reversal patterns in the middle of nowhere. So the market hasn't gone anywhere for you to warrant you looking at the chart. You're taking a trade because you think that it makes sense to take a trade because you're not in the market essentially and you're gambling. Whereas to make money over the long run, you need to wait for the markets to come to predefined levels where you feel like something's going to happen. So, for example, looking at the Australian dollar, Canadian dollar that we have in front of us, if we look at this on the daily chart, this chart down here at the bottom, you should be able to see that we're at a relatively large support level. The market has sold off down to the 0.9741 type area, in and around the area. And just below that, at the 0.9651, there's another support area. So we're in the sort of support zone at the moment. What that means is that we're expecting something to happen at this level. It may be that the market sells off, it may be that the market rallies, but essentially something's going to happen here. It's not just going to stay there. And that gives us an edge in the market. That allows us to be able to take a trade. So right now, I'm looking at this big level. I'm trying to put some context around it. And what am I saying to myself? Well, from a longer term perspective, we've got a higher low here. So we've got a low, a higher low. And then we've got a high here. But all of the subsequent highs, they're not able to get above these highs over here. So what's happening is the market is starting to sell off. Okay. And then we've got some sort of shorter term lows being broken. So we've got this high here, a low here. If we go along to the right, we can see that the market then breaks through that level as well. So the 0.9951, the market's broken through that structural level, which we can see on the daily charts. And ultimately what that tells us is that the market is going lower. However, we need to bear in mind that some of this move, okay, was driven by fundamental data. So the Bank of Canada came out last week with their interest rate announcement and really shook up the markets. And ever since then, the markets have just been digesting that information. So we need to decide for ourselves, what do we want to do here? From a longer term, well, not from a shorter term perspective, sorry, if we look at the 4-hour chart, if we look at the 1-hour chart, you would say that the market's weighted to the downside. So if we start to sell from here, it will probably go lower. However, what we also need to take into account, and this is where the price action, this is where kind of going a little bit further than being just one of those new traders that don't really understand the markets and just want to trade a system regardless of what the market's telling them, this is where they go wrong. If we take a look at what happened after the news release last week, the market sold off significantly, right? So it went from 0.9883 all the way down to 0.9671. So that's what, 9883 to 9671, 212 pips almost of a move there. But after that, what happens? Then the market gets bought back again. So then, even though it sold off 210-ish pips from there, it then got bought back, and we're talking it's now 100 pips higher than when the news was released. So within this, in fact, I say within this 4-hour candle, within the 1-hour candle, that was the reaction to the news. Now, what that tells us is that, yes, there was an initial reaction, but it might be something where sort of traders were positioning themselves ahead of the news announcement. So buy the rumor, sell the facts type scenario. So everybody was anticipating that they would raise interest rates, which they did. But now the market's saying, well, are they going to raise interest rates any more this year? Perhaps, but if so, how quickly are they going to do that, right? And that's what we see in this price action here. So we now need to decide for ourselves, what is the path of least resistance? Do we think that the Canadian dollar strengthens from here? Do we think that it's going to break through this level and start selling off? And if we zoom into the daily chart there, if it sells off, if it breaks the support at 0.9651, then I guess we can be looking at 0.9343 as the next area that the market's going to go down to. But will it do that now? I think potentially in the long run, so if we're talking 3-4 months, I won't be surprised to see it any lower. But in the short term, I think we probably would do a little bit of a pullback. We need all of the traders to kind of absorb all of the news and start to get a little bit excited again about the next interest rate announcement. I don't think that the Bank of Canada will do anything else at the next one, so next month, but potentially when we come into the autumn and maybe the winter, then we'll see some movements. And what we'll see is that the financial markets will then start to anticipate that. So looking at this now and taking the price action into account, we're at a massive support level. I think that the market will probably rally from here. Where will it rally to? The most obvious area is this previous structural area over here on the daily charts, which is 0.9951. I think the market rallies up to here, And that's when additional bears will come into the markets and they'll start to say, okay, we're going to sell this pair down. And that's when we will then see the big support down here get cracked. So in terms of a trade, how do we play this? I would say that now that the market's made these structural levels here, we've got a lower high coming down here, but then we've got a low here followed by a higher low. I think if the market gets above this level, which is 0.9780, we see the market rally. So I'm going to have an order in there to say if the market gets above that level, I'm going to become a buyer. Okay, does that make sense? So that's the Aussie CAD, and sorry, I spoke a little bit too much there, so I'll try and make the other pairs significantly quicker. But hopefully you get the idea as to what we're doing with the strategy here, which is ultimately we identify areas of support and resistance, and then when the market gets to those areas of support and resistance, then we look at taking a trade by, first of all, we anticipate something's going to happen. All right, so we anticipate something occurring at a level, but we don't get in just because we think it's going to happen. We wait for the price action to confirm it. When the price action gets to the level and the price action confirms what we're expecting, then we can take the trade. Does that mean that you're going to make money every single time? Absolutely not. Does that mean that you're going to probably lose money a good portion of the time? Yeah, maybe. But if we have a positive risk reward and you have an edge, which trading price action you do have an edge, and you stick with it as well. You know, you're not one of these people that's like, I don't fancy doing this today. I'm going to try a different strategy or something like that. You know, as long as you stick with it, then you'll come out ahead of the game. So looking at the Aussie franc, we're stuck in the middle of the range right now. I personally don't know what to do here. If I look at this, I think it potentially could break out above these highs here. But what I would like to see is I'd like to see the market break and hold above the level. So around the 0.7780 level, I want to see the market break out above there and hold above there, and then make another momentum move to the upside. That's when I get long. Having said that, we're at a huge resistance level. Okay, if we look at this on the daily, it's a massive resistance level. And it's unlikely that the market just gets through there without any issues. So there could be some shorter term opportunities to sell at this level. So when we get up there, which we're not too far away from, we're looking at 0.7780. The market's at 0.7735. So what are we talking at? 45 pips away from the level. So in 45 pips time, if we start to see a bit of a reversal price action here, I'd be perfectly comfortable selling this down to the support level at 0.7531. I think the market gets up here before it gets down here anyway, so that's where I'm going to be focusing my energy on. Looking at the Australian dollar, Japanese yen, quite similar in some respects. We have a previous trade that we took more recently, and this just kind of shows you the power of price action. We had the market rallying up and respecting the trend line. Eventually, it broke the trend line. This is something that I posted on, I think, YouTube, certainly Instagram. So if you guys don't follow me, find the link after this webinar there and go and have a look. Something I posted there literally before the event. So I said, look, the market's respected this trend line. It's broken through the trend line. I think if it respects it on the way back up and then we get a breakdown, we see the market move lower. And what happened? Exactly that. I'm not saying that to say that I'm a genius or anything like that. It could have gone against me. I could have lost money. But the point is, as long as you follow this stuff and you kind of, you're strict in your routine, there are trades out there that will make you money. And the trades that make you money will make you more than the ones that lose you money. Okay? What do we do right now? Sod all. Now we just really need to wait until it comes up to either this resistance level at 90.10 or this support level at 85.50. But until it gets up to one of those levels, I'm doing nothing. I'm sat on my hands. I'm just going to relax. The Aussie New Zealand, so that is, I think this goes higher from here. I kind of missed an opportunity. I would have liked to have bought this, but the price action was just a bit crap. Excuse my language for anybody that's a child listening to this, but the price action really wasn't great. So I've missed that. But I do think that this goes higher from here. I don't think you can get this sort of momentum and all of the balls in the market just disappear. they may take profits, and we may see that this pulls back a little bit more. In fact, I'd like it to pull back some more because that will then give me an opportunity to get involved, because I'm not at the moment. If it goes from here, then I miss the train and c'est la vie. But I would like to see it maybe pull back towards this support level here, at which point then I'll look to get involved in a long trade. So again, in terms of the strategy, we're identifying high probability areas, so big areas of support and resistance, areas where the market's come to it before, and it's proved that it's going to have a reaction to that level, okay? So we're highlighting these areas, and then once we highlight the areas, once price gets to them, then we react accordingly. Whew. Okay, moving on. Am I speaking too quick for everybody? We've got like 28 pairs to get through, and I'm aware that that's quite a lot. And if I speak too quickly, then you probably won't understand anything anyway, so what's the point? Still alive? Yes? Excellent, good. Okay, Aussie dollar. Aussie dollar is in... Thank you very much. Aussie dollar is in an uptrend at the moment, waiting for it to pull back towards the 0.7800. So it's a nice round number. It's quite a pivotal area in the markets. As you can see here, when it was a resistance area, the market constantly came up to it once, twice, 3 times, 4 times, 5 times, 6, 7 times, always coming up to this level and selling off from it. Then it breaks through it, and what happens? It comes back to that level, and it rallies from that level. The market looks like it's going to be turning around from here, and that's fine. It might break through that level, but I think at least we have a short-term reaction to this level. So what I would do is possibly jump down to something like a 15-minute chart when we get down there and look for a short-term reaction, or even a 5-minute chart. Short-term sort of like a 1, 2, 3 reversal at this level, and then a short-term rally up to the middle of this range here, before obviously maybe looking to take profits, depending on what the momentum is at the time. The CAD franc is rallying at the moment, so I think we need a pullback here. We've already identified the 78.11, so 0.7811 area as being an area of interest. It's not there yet, so there's no real trade to take yet, but I think if it does get there, this is where we're going to be looking for our reversal. So we'd be looking for the market to kind of, and if you don't know what a 1, 2, 3 reversal is, let me just kind of show you. So you have the market come down, okay, like that. It then rallies up a little bit, like so. It then sells off a little bit. And when it sells off, and this is the important point for 1, 2, 3 reversal, we've got a low here, we've got a high. The market then comes down to make a low. We don't want the market at that point to break through the low because we want a technical reversal. So then we put in another level over here. And when the market breaks through this high here, what happens? We've got a low, we've got a high, we've got a higher low, sorry. And then if the market breaks through that level, what would we have? Anyone? If the market breaks through this level, what do we have? We've got a technical trend reversal, right? We have a higher high. So that indicates that the market's potentially going to go higher. So that's what we call a 1, 2, 3 reversal. It's 1, 2, 3. Market goes through that level, that's when you get involved in the trade. The CAD yen, more or less a carbon copy of the CAD franc, so it's broken through a significant level, and we're waiting for the pullback, which hasn't occurred yet, but I'm very, very confident that when it does eventually occur, it's going to give us a nice opportunity to get involved in the trade. But at the moment, nothing really to talk about there. If we look at the franc yen, this one's a bit of a tough one. It kind of looks like we're going lower. The momentum's to the downside. That much is for sure. The market broke out above this structure level and it's broke back below it. So you could say that if the market gets below this level on the daily charts, oops. This level on the daily chart here, then it will continue to go lower and lower and lower. But by the same token, if you look at the momentum here, we've got a nice move to the upside. The market sells off. It rallies to the upside again, sells off. This could be the beginning of another wave to the upside there. So that's something we really have to pay attention to in the coming weeks and months. So I would say if you force me to take a trade right now, I would say I'm looking for the market to break beneath this level here. And this is what price action trading is, right? It's all about looking for levels on your charts that make sense to take trades from. This is a support level. It's a very big support level. It would almost look like a head and shoulders. If the market breaks beneath this level here, I'm going to be a seller. So I'm a seller at 11265. Euro Aussie is just looking like a bit of a disgrace of a chart, if I'm honest. It's just, well, look at that. Who wants to trade that? There are better opportunities out there. Let's just ignore that because no one wants to get involved in something that looks like that. EuroCAD is a strange one. From the hour chart, obviously it looks like we are selling off quite nicely. Every time the market pulls back, it sells off again. But we are at a very, very significant level of support here. So if the market breaks through that level, if the market doesn't break through that level, then we could see quite a big rally from here. And I would say that it's more likely that the market does rally from here than that it sells off completely. I don't have a problem if it does sell off. If the market sells off and it holds beneath this level, then I will become a seller. I will be selling EuroCAD. But I just think that where it is right now, looking at the support level, it's a strong support level. So I really think that we're going to see a short-term reaction here. So I might take a buy through the 1.4593 and basically look for it to trade up towards the 14850 area, which happens to be this previous level of resistance over here. Any questions so far, by the way? Are you all listening intently? No questions? Is it just because I explain it so well? Of course. Okay, Euro Pound. What are we looking to do here? Well, I was looking to become a buyer here at this sort of level, but with the momentum of this candle here, I'm not so sure. I think I'll probably wait for the price action to, excuse me, for the price action to prove itself a little at this level. So I'm not going to take a trade on the Euro Pound this week. I'll wait for it to set up next week and see what the price action looks like on Monday before we get involved in a trade here. I just think that if we didn't have this momentum, I'd be quite happy to take the trade and to become a buyer at that level. But looking at how much momentum the market has going into that level there, I don't think it makes sense to do that. So I'm going to wait and really kind of make sure that the market's going to respect the level. Because in the moment, if you just become a buyer now, you're standing in front of a train. You're saying that you know more than the markets, which you don't, which I don't. No one does. So let's just wait to see what the reaction is. Euro yen is moving higher, but there's no real opportunity right now. So we'll skip that for the moment. Euro New Zealand is moving higher, but we need for it to wait for it to come to a decent level, which I think is the 1.6235. The reason I think that is it's a previous level of resistance over there, not just any level, but we can see that the market rallies from 14618 up to 16244. So you've kind of got, what is that, 1600 pip move there. And at the end of that 600 pip move, the market then sells off from 16200 down to 152. So you then got another 1,000 pips-ish. from that level. So quite a significant level. I think if the market gets there, it rallies from there. So I'm just waiting for the market to set up. It hasn't got back there yet. And if it rallies from here, then that would just be really sad because we don't get to make money from the move. But it's worth it because that will keep us out of losing trades. And more often than not, those types of trades are losing trades. So we wait. We wait for the market to come back to that level, and that's where we become a buyer. Euro dollar is just kind of, you've got to be a buyer of euro dollar, but where is the question? I think potentially the most likely scenario is the market pulls back to this level of support here at 116.60. If we look left, there's no real other major levels that make sense other than this one here. This one, obviously, you've got the previous resistance here and here. Then when the market broke through it just now, it used it as a support level. So I think if the market pulls back to there, that is a good area to start becoming a buyer from. So we're going to look to be buying from 1.1660. Pound pairs. So pound is rallying today. Pound Aussie, I'm not entirely sure what to do with this. I think momentum is shifted to the upside here after this sell-off, but we need to wait for the trade. So I'm going to wait on the hourly chart. Excuse me. Again. Why am I yawning so much today? Guys, keep me awake, okay? Lost my trail of thought. Let's engage the brain, Ong. Engage the brain. Okay. Yes, it's rallying from here. I think we wait to see, look for some momentum, wait for a bit of a pullback on the 16-minute chart, and then look to get long. So no trade right now. Pound is obviously going higher, but we just need to get involved in this. I guess it's going to be the same for all of the charts. So pound cat exactly the same. There's no opportunity, but I think we know that we're going to be buyers of this. We just need to wait for a pullback, counter trend line break, and that's the sort of thing you're going to get involved in. The pound franc is the same, although we are coming up to quite a level here. So this will be an interesting one. We've got momentum to the upside, that much is for sure, but we've got some fairly significant resistance level in at 1.3068. Currently the market's trading at basically 9000. So you're talking 160 pips from here. I think potentially we could get an opportunity for a short-term reversal at this level. Now, it may not be a massive trend changer, that much is for sure, with this sort of momentum, but it may be just enough for you to be able to dip into the market, so take a little bit of profit and get back out again. So I'll be looking for initially a sell-off from this level here, but if the market gets out above it and can hold above it, and when I say hold above it, I mean the market kind of moves sideways, respects it a little bit, and then gives its move to the upside. And if it can do that, then I'm certainly going to be looking to become a buyer of that move. Pound yen, no surprise, that's rallying. That's also at a resistance level, but I think the market, the pound yen, probably won't pay any attention to this. And it'll be a good opportunity to get involved in this trade. So let's get rid of that there. Yeah, if we get above, so the level was 14838. If we get above there, I'm going to become a buyer. In fact, as we're doing it, let me just, because this market moves very, very quickly, I'm going to jump onto the platform now and put in this order. So 14838, let's give it a couple of pips. I'm going to say 14850, I become a buyer of pound yen. Give me 1 second. Wonderful. Markets won't, okay. I will become a buyer. When the markets, actually my phone lets me go in there and put on the order, I will become a buyer of pound yen above that level. Pound New Zealand, lovely, lovely, massive momentum move here. And I think any sort of a pullback towards the moving averages will signify good opportunity to become a buyer. In fact, looking at all of the charts, I'm probably most confident about this one than any of the others. So pullback in pound New Zealand is going to be an opportunity for us to get long. There is no pullback at the moment. With all of the pound pairs, if you look at them, if you get in now, you're literally just chasing the markets. So don't do that. Don't do that. Okay, so we've got a few more currency pairs. We've got the New Zealand CAD, which is selling off quite nicely, looking for an opportunity to become a seller. Potentially the first level, which well, you can't really see it on the, you can see it more on the 60-minute chart, which is where we'll take our trade from. You can see that the market came down to here, it rallied a little bit, sold off, came back, respected it, sold off again. If the market comes back to this level, I become a seller pending the correct price action. So I'll be looking, because the level's on a 60-minute chart, typically what I look to, wow, why the wow? That's a good wow, Pat, right? Or are you saying World of Warcraft? Could be either. While you decide whether that's a good or a bad wow, I will continue. I'll continue with the presentation here. So, New Zealand CADs, looking for a bit of a pullback here. I think that this is the first level. Look for a 1, 2, 3 reversal. Because, as I said, it's on the 60-minute chart, I think we look for the reversal on the 5-minute chart. So up, down, up from the 5-minute chart, that's where we get the 1, 2, 3 reversal. Looking at the Kiwi franc, it's just broken up above a resistance level there. It's moving along sideways. I'm going to become a buyer. Let's change this. I'm going to become a buyer when the market breaches 0.7018. So when it gets out above this, this is 100% where I become a buyer. The New Zealand yen. A little bit ugly, if you ask me. If you forced me to take a trade here, I honestly don't know what I would do. If you put a gun to my head and said, you must take a trade here, I'd probably just have to let you kill me, because I can't pick which direction this is. Obviously, the momentum's to the upside, but at the same time, the market's come up to a resistance level and it's turning around. So when you get trades like this, all right, as a new trader or retail trader, this is when you really need to kind of engage your psychology and say, you know what, there's no trade there. Move on to the next one. No one's forcing you to take a trade, right? No one is saying you must be in the markets. It's only you, when you're new to the markets, that think, oh, I always have to be involved in a trade, because if I'm not, then how can I make any money? But you need to remember that part of trading is, it's about not losing money. You know, it's not all about making money. I kind of give you the analogy of Floyd Mayweather, the boxer, right? Who's seen him box? Boring as sin for the most part. Okay, he's had a couple of fights which aren't too bad, right? But most of his fights, it's really boring to watch. And people will argue that, oh, he's not a great boxer. He's 50-0, but he's not a great boxer. But they forget, you know, they say all he does is defend. But defense is a part of boxing. It's a valid part of boxing. It's half of it. You know, he just wants to protect himself to make sure that he doesn't have brain damage or something when he's older. All right, so he understands that by being able to be a good defensive boxer, it means that he doesn't get hit, and therefore he can go on and he can win his matches. Trading, similar thing. By understanding that it's not all about making money. You know, 50%, in fact, more of it is about not losing money. So when you see charts like this, where there's absolutely nothing for you to trade, okay, you're just making it up. You're picking up your screen. You're kind of putting it on its sideways, saying, well, you know, I don't know. It's kind of, if I turn it on its side, then that could be a trend there. That's a rookie mistake, and that's where you're going to cost yourselves money. You need to make sure that when you're trading and when you're making money, you're growing your accounts. You're not clawing back losses from retarded trading that you've been doing for the previous 3 weeks. Does that make sense? Just hit yes or Y on the keyboard, just so I know that you're still there and you're still paying attention. Excellent. Thank you very much. Okay, last few pairs here. And then I'll get off of my soapbox and you can all go back to having a nice day. Kiwi dollar, we had this support level in here, which I think really we can get rid of that now because it's kind of not doing much for us. Goodbye. 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 So let's get this in here. I think we've got a good opportunity to sell here. Look at this, Kiwi dollar. Market's been selling off significantly. Yes, it's pulled back, but it was reacting to this previous level of resistance over here. Put in a resistance level. Now we can see we've got lower highs. So a high here, a lower high here. The market's breaking lower lows. No, not lower highs, lower lows. And if it gets beneath this level, I think what I would do is drop down to something like a 15-minute chart or a 5-minute chart. And if it gets beneath this level and kind of gives us a bit of, it goes sideways a little bit and then breaks through the level, that will then signal a good opportunity to become a seller. Dollar CAD, I definitely want to be a seller of the dollar CAD. I just think that there's a bit of a pullback here. I think that the market is due one. So I think at least if we can get up to 12409, that will be a good area to start selling from. But if we have some momentum and it even goes higher, then 12783 is an even better level to start getting involved in a trade from. So that's what I'm looking at the moment. It's nowhere near there right now. But when it does get there, that's the trade I'll be taking. The dollar franc is just in the middle of nowhere, doing nothing but going sideways. So we don't even need to waste airtime on that. And then finally, we have the dollar yen, which was going to sell off. It broke beneath the support level there, but now it's been brought back a bit. I think that the market goes higher here. The price action certainly says that. So once it gets above the 11071 level, which is looking like it's breaching at the moment. So pretty much once we've done this webinar here, I'm going to get involved in this trade. I'm going to become a buyer of the dollar yen. And the reason is if you look at the price action, one of the things I really, really love is when the market kind of breaches a level, a significant level, and then rejects the level. Because you know that if the market breaches a level and there's real momentum in there, then the market really, really sells off. But when it doesn't do that, then it tells you something completely different. And I think these are really, really strong trades. So I am literally, after this webinar, when we close this up in a few minutes' time, I am a buyer of dollar yen based on the price action here. Again, strong level of support there. The market reacts to the level. It sells off, doesn't hold beneath the level, and then rallies from there. So looking to buy dollar yen after this webinar. Okay, that wraps it up for all of the currency pairs. I will now open the floor to any questions. We've got just a few minutes left, so if you squeeze in your questions very quickly, I should be able to answer them. If there are no questions, then obviously we can wrap up the webinar and say, have a fantastic day. Thank you for joining and all of that kind of good stuff. So I'll give you a few minutes to type in your questions, and then we'll go from there. Pat, you also didn't answer the wow question, so. Okay, people, if there are no real questions, and that's absolutely fine, not a problem at all. I hope you enjoyed today's webinar and you got some value out of it. I think the biggest thing that I want to show you from this is that price action is very, very simple. It's very straightforward. It's about highlighting areas, okay, that make sense. It's about highlighting strong areas of support and resistance, waiting till price gets to the level, and watching to see how price reacts when it gets to that level. You don't need anything else on your charts. That's all you need. Okay, and as long as you can stick with that, you're going to make money. You're going to come out ahead of the game. Okay? So I'd like to take this opportunity to thank you all for joining. I'd like to thank FX Street, as always, for hosting the webinar today and for putting all of this on. It's been fantastic. I've been doing this for many, many years with FX Street now, and I really do appreciate everything that you do for us. Everything that you do for the community. So everybody have a fantastic week in the markets. Have a great weekend, and I'll speak to you all on next month's webinar. Okay, so take care now and good trading.